Ladies and gentlemen, good day and welcome to the Q3 FY22 results conference call of Monte Carlo Fashions Limited, hosted by Emkay Global Financial Services. We have with us today Mr. Dinesh Gogna, Director, Mr. Sandeep Jain, Executive Director, Mr. R.K. Sharma, CFO, and Mr. Ankur Gauba, Company Secretary. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Devanshu Bansal from Emkay Global Financial Services. Thank you, and over to you, sir.
Yes, hi, good morning everyone. I would like to welcome the management team of Monte Carlo Fashions Limited and also thank them for this opportunity. Without taking much time, I shall now hand over the call to the management team for their opening remarks. Over to you, sir.
Yeah, good morning everyone. It's a great pleasure to greet you all on behalf of our Board of Directors. Thank you for joining us for this earnings call of Monte Carlo Fashions Limited to discuss the financial and the operating performance of Q3 and 9 months financial 22. I hope you and your family members are keeping safe and healthy. I would like to highlight that certain statements made or discussed on this conference call today will be a forward-looking statements, and a disclaimer to this effect has been included in the result presentation shared with you. Result documents are available on the company's website and have also been updated on the stock exchange as well. A transcript of this call would also be made available on the investor sections of the company's website. Before talking about our financial and operational performance, I would like to talk about the macro environment. Indian economy has already moved to a normalcy in spite of minor disruptions caused due to newly evolved Omicron variant in the month of December and January. All our stores across geographies are now fully operational, and people are definitely venturing out of their houses more freely for going for vacation, shopping and parties, which will further accelerate the demand for different types of clothing. Indian domestic textiles and apparel market is expected to grow at a 10% CAGR to reach 190 billion by 2026. And the shifting consumer preferences towards branded apparel gives us ample scope for growth. Now let me share with you the financial and the operational highlights for the 9 months ended financial 22. It gives us immense pleasure to inform you that the company has reported its highest ever revenues from operation of 741 crore during this 9 months as against 513 crore during 9 months of financial 21, registering a growth of 45% year on year due to strong recovery in demand across all product categories. And more importantly, we have surpassed our last year's sales of 656 crore. And also, we have achieved our pre-COVID sales for full financial year, that was 726 crore. Also, we have surpassed that sales. We continue to witness encouraging trends from online sales channel, which stood at 48 crore, as against 25 crore in 9 months financial 21, and increase of 85% year on year. Operating EBITDA margin decreased by 150 basis points from 22.8% during 9 months financial 21 to 21.3% 9 months due to increase in advertising and other expenses similar to pre-COVID levels. I would like to highlight once again, due to seasonality involved in our business, investors should always see our business performance on full year basis and not only in the quarter. Our balance sheet continued to remain strong with cash and cash equivalent of 194 crore and zero net debt on 31st December 2021. We believe that we have built a strong foundation for the future with sustainable and profitable growth for the long term. Our current strategy is to establish a strong brand pan by increasing our presence pan-India. Our key strength is our extensive distribution network, which is present across India. On 31st December 21, our company has been present through 315 exclusive business outlets, more than 2,000 multi-brand outlets, 730 national chain stores, 235 shopping shops across all major and also present across all major online platforms like Amazon, Flipkart, Myntra, Nykaa, Tata Click, Azio, and Captions, in addition to our website. During the 9 months financial 22, the company opened 31 new stores in different regions and at the same time closed few non-performing stores also. Majority of our net revenue comes from the franchise, EBOs and MBOs, where we primarily sell on pre-order or outright basis. By virtue of this business model, there is no major inventory risk and we always remain insulated from the normal hazard sales in branded apparel business. I would like to highlight that till date we have experienced almost zero bad debts in our business, which stands testimony to our strong business model based on a zero credit risk policy for the company. At Monte Carlo, we are pledged to provide our customers with the finest clothing through product innovations, high quality, and the launch of new collections from time to time. Moreover, we continuously work towards changing the look and feel of our store to give customers best-in-class experience. To further enhance recall and visibility of our brand among consumers, we are focused on advertising by different platforms like television, online and digital channels, national and regional newspapers, hoardings and billboards displayed at airports and cinemas. As announced during last quarter, to leverage the growth opportunity in home textile sector and to reap the benefit of PLI scheme announced by the Government of India, we have incorporated a subsidiary company which will manufacture rugs around 13 million square meter per annum with a total investment of 355 crore over a period of 5 years. Moving in that direction, we have already filed the PLI application with the Government of India, whose approval is expected shortly. At Monte Carlo, we believe in stable and the supreme performance, with our focus will be on maximizing the revenue growth going ahead. Large interest is to build the profitability by maintaining cost control measures and focus on improving return ratios and maintaining healthy balance sheet position by following a asset-light model. So with this, now we open the floor for question and answer session. If any of you have any queries post this earning call, you may also connect us at investor@montecarlocorporate.com or Dickinson World, our investor relation advisor.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harish Shah from HS Investment. Please go ahead.
Thanks for taking my question and congratulations on a good set of numbers. Could you just give me the volume of pieces sold in during the 9M FY22?
Yeah, sure. So the total volume for the woolens is having a volume growth of approximately around 30%. It was 9,90,000 pieces in last year financial year, and this year it is 13,73,000 pieces in woolens. And in cotton category, it was 18 lakh pieces.
So comparison नहीं है सर, क्या भी होगा 9 to 9
9 to 9 months बोल रहा हूँ.
9 to 9 months स्क्रीन पर है सर. 3 lakh pieces अपनी प्राइस.
In cotton category, it was 25.62 lakh pieces last financial year, and this year it is 40.76 lakh pieces.
Okay. And which includes any institutional sales or B2B sales?
It includes all the sales.
Okay.
Including MBOs, EBOs, NFCS, and online channels, and also corporate sales.
Okay. Thanks. That's it from my side.
ये सिर्फ क्वार्टर है खाना. Only quarter. Financial year.
The next question is from the line of Venkat Subramaniam from Organic Capital. Please go ahead.
Hi, thanks for taking my question. I had a couple of questions. What portion of the current quarter growth is because of destocking or low level of stocking by all your distributors? And two, input cost pressures have been pretty immense for the industry. What have you done about it, and how well are we equipped to pass on the prices? Thanks.
I just wanted to ask, what is the first question? You want to know that whether the distribution have destocked the goods, is that right?
No, in the previous couple of calls, you've been mentioning that stocks actually inside the system of all our distributors has been pretty low, and therefore there can be a good bounce back, which is really how it's panned out now. So the kind of growth that we have had in the third quarter, how sustainable is it? And is it primarily driven by low level of inventory in the system, or is it also because there is a lot of demand pull?
No. See, when growth comes, definitely there is more inventory, then only you can generate more sales. But as far as closing stock is concerned, the closing stock is lesser than last year's closing stock. So it means that the volume growth is there, the value growth is there, but at the same time, the stock which has been there in the retail level at the and other level, it has gone down. So as far as your second question, which is input cost is concerned, there have been pressure of input cost because of the raw material and also because of the fuel and other things. And so that costs have gone up, but still we have maintained our margins, and also we have passed on most of the input costs to the consumers and retailers. Even in our recently conducted summer trade show, so there have been an increase of 18% in our summer wear prices, which have been completely absorbed by the consumers and retailers, and those costs have been passed on to the consumers.
Okay. So on both the fronts, you would feel that the current growth trends and current margin trends can continue or improve. Is that your message?
See, one thing which we have guided in the beginning of this financial year was that we will be able to maintain our previous margins of 18 to 19% EBITDA, pre-COVID level margins. So last year margins was exceptional margin because of cut in advertising costs, cut in salary costs, cut in other expenditure. But the historical margin of the company lies between 18 to 19% EBITDA, which we fully stand by and committed to achieve those guidelines in the future as well. And as far as revenue growth is concerned, in the beginning of the year, if you recall, we have given the guidance of 20 to 25%. Then in the middle of the year, we have revised that to 25 to 30%. Then in last 1 month, we have revised their guidance again to 30 to 35%. So the company has revised thrice this guidance in this year going forward, which shows the confidence of the company in its business model. And we are confident to achieve this guidance going in the fourth quarter as well. So the company, and one more thing I would like to add over here is that, we are not an IT or a pharma company where the quarterly revenues are matched always. So it's a apparel company which has to be seen on a yearly basis, and we always give our guidance annual based. We have never given our guidance a quarter based because there are quarter based variations because of early dispatches, because of late dispatches, because of seasonality. But at the end of the year, whatever company has guided, we have always put by a guidance of the full financial year guidance and full financial year margins. Thank you.
Understood, sir. Thanks a lot. More to you, sir. I'm done, yeah.
Thank you. The next question is from the line of Dipen Shankar from Trustline PMS. Please go ahead.
Good morning, everyone, and thanks a lot for the opportunity, and congrats for a good set of numbers. So firstly, wanted to understand, so in woolen business, do we also expect Q4 to be strong with some more growth coming due to extended winter?
Definitely, yes. USS, we sell everything, including woolens also, including cottons also. So Jan, February is basically USS, and then the March, the fresh category sales starts. So we are very confident going forward. and the trend will continue like the annual guidance which we have given is, we stood by this guidance, even though there have been disruptions in the economy by the Omicron variant in December and January. But still, as of today, I think we are more confident than before going forward.
Okay. So otherwise, generally Q4 seem to be discount sale for winter goods. So are we expecting this discounting to be coming down this year as compared to last year?
I can't say the discount will come down this year because there have been disruptions by the economy, by the Omicron variant, and there were some shops which were closed in Delhi. There were some shops which are closed in Haryana and other regions also. So that actually made every company to go for a discount early and also the bigger, higher discounts to get rid of the inventory because of the early disruption. Still, I think we have been very fortunate to have our inventory liquidated, and at this moment we are very confident that our closing stock of winter goods at retail level will be same or less than the last financial year.
Yeah. Okay. And this employee cost at this current level, so this run rate will continue, or are we expect some degrowth at this cost level?
Yeah, employee cost is only increased because of the increments given in last financial year, because it was not given to last year. But going forward, the percentage will remain same, or it may come down because of when the value increases. So by percentage, it may come down.
Okay. Sir, and lastly on this rugs and mint blanket business, so any updates can we throw on sustainable margins front? So what kind of margins we can make on that business?
See, as far as the DPR, which is detailed project report, is concerned, in rugs, in the second to third year, we'll be going to have the margin of 18 to 19% EBITDA, which is same as in our business. So I don't think it will affect our business. It will only increase our revenues as well as the profitability going forward.
Okay, sure, sir. Thanks a lot and all the best.
Thank you. The next question is from the line of Danish Mistry from Investor First Advisors. Please go ahead.
Hello, sir. Good morning and congratulations for the good sales growth. I just had 1-2 questions, if you can. The first one is, sir, the other expenses for us have gone up quite a bit, almost 50% on a year-on-year basis, given that we are, looking at seasonal quarters. So last December versus this December. So what do you think has driven that, sir? Do you think it's the logistics cost? Where have we seen this inflation, and do you think it is sustainable, or do you think it is going to come down, sir? And by how much is your estimate?
See, if you see the comparison, it was 14.65% last financial year, and this is 15.5% this financial year. The major reason is it's an increase of 90 basis points. That is not that much. It is because of traveling costs, Because in COVID, people didn't travel to various locations. But in this financial year, definitely, because when you need to grow, you need to travel to different areas. So that is part of the business. So that is why it has gone by a 90 basis point. I think that's marginal and as far as our business is concerned.
Got it, sir. No, simply because, we have maintained our gross margins, but it is the employee cost, other expenses, and advertising cost and CSR, which has actually resulted in a negative 2% YOY growth. That is the reason, sir, to understand. So do you think that these expenses will remain at these levels, or do you see them coming off, sir?
No. I think they will remain at this level, or marginally they can come down as we grow next year.
Oh, got it, sir. Got it. And, sir, the advertising expenditure, sir, it was very heartening to see that we have, taken this up to 8 CR. Do we continue with this level, sir, of advertising expenditure?
Yeah, see, advertisement is basically the lifeline of any brand. So basically, you need to be present in the market to know people what you are making. So in COVID year, basically, we didn't do much advertising because of to cut down the cost in various areas, to save ourselves. Mm-hmm. But now to increase our presence to other, geographics where we are not that strong. So it will definitely be into level of 2 to 3% of advertising, which was just 1% in last financial year. And that is why you see that this year the quarterly profit has gone down by 5 CR because we have increased our advertisement spend.
Got it, sir. And sir, the CSR 1.8 crores that we have done, will we be doing that every quarter, or was it a one-off thing? Because last time, same quarter, we did not have it. That's why I just checking.
This is once in a year. So this is 2% of your net profit, which you have to do as per the government SEBI regulations.
Got it, sir. And sir, last question.
Yeah.
Got it, sir. And sir, last question from my end, sir. If you can just touch upon, you had mentioned a couple of calls ago that you were looking at the T-shirt market, and that time it was about 120 CR on an annualized basis of sales. So, some sense on that, have you launched that other brand that you were talking about, and, how do you see that market growing for yourself, sir? Thank you, sir.
Which one? Which
T-shirt market. So you had mentioned that, there were certain categories like T-shirts which were in more affordable segment and, which were unorganized and all, and therefore you were looking at launching, a sub-brand, a less premium brand, which would kind of address that market, sir.
No. I think there is some miscommunication in that. We only wanted to increase our presence and to strengthen these categories. And that we have been able to do this financial year. If I just compare the volume of last year, it was around 8,64,000 T-shirts, and this year we did 12,77,000 T-shirts. So there has been a volume growth of around 50% in T-shirts also in this financial year.
Understood, sir. Understood. Got it, sir. And our cash balance today, net cash is how much, sir? Net cash?
191 crore.
191 crore. Thank you very much, sir, and wish you the very best of luck, sir. Thank you, sir.
Thank you very much.
Thank you. The next question is from the line of Keshav Garg from Counter Cyclical Investment. Please go ahead.
Sir, many congratulations, especially on the revenue side. And sir, wanted to understand that, sir, our seasonally Q4 and Q1 are weak quarters, and we often face some operating loss, which pulls down the profitability for the full year. So going forward for the next 2 quarters, sir, you think that the company is now in a position to at least break even on EBITDA level?
See, I can't comment on the fourth quarter numbers right now because there have been discounts going on, and we will only come to know once we have a 31st March. But I think the annual guidance which the company has given, we purely stood by that guidance. That is 30 to 35% growth, and we will be able to maintain our margins to pre-COVID levels. So by that you can estimate, the kind of the growth we will do in next quarter and also the kind of EBITDA. Because we are not concerned or bothered about the quarterly movements. So in some quarters, there are lesser sales, in some quarters there are more sales. But the overall EBITDA and overall growth of the company will remain at that level which we have guided in the first quarter conference call.
Sir, so now that we have a high base of this year due to stupendous growth, sir, in next financial year, FY23, sir, how do things look, sir? What is the feedback that you are getting from the retail channel about demand, and how much can our revenue grow on this base next year?
Yeah, thank you very much. So I was expecting this question, and thanks it came from you. See, I'm just giving you some of the comparisons with our competitors which are there in the market. See, we are the only listed apparel company which have grown the full year sales of pre-COVID sales. I'm just giving you an example. In 2019-20, the company has annual sales of 726 crore. And we have achieved 742 crore. Even in 9 months, we have crossed that sales. In case of Cable Kiran, the sale was 530 for pre-COVID sales in 2019-20, and they have just done 438. In case of Raymond, it was 6,482, and they have done 4,220. So why I'm listing, giving you this figure is that, see, the company has changed its strategy from last 2 years that how they can grow faster than their competitors. So we have been opening our fronts in various areas, particularly in EBOs, in MBOs, in national chain stores, in e-commerce, where all the segment and all the categories we are experiencing a growth. So this year when we can grow 35%, definitely I can't say that we'll be growing 30% per annum, but definitely we'll be growing double digit going forward and healthy growth rate as all our channels, all our categories are doing very well, and there has been a very good acceptance for our brand by various retailers who are even not working with us. So going forward, I think we were never that confident what we are in this financial year if I compare last 4 or 5 years. I hope that this answers your questions.
Yes, sir, it does, and sir, very heartening to know. And sir, lastly, just one request on behalf of shareholders, sir. Company has a very healthy dividend payout, sir. But instead of dividend, if we can do a share buyback, our stock is still cheap. if we take out the cash, then it is in single digit price to earnings. So if we can do a share buyback instead of dividend, we can reduce the number of outstanding shares and our EPS will grow faster than our profit growth going forward. So please consider that, and thank you very much.
Yeah, thank you, and we definitely appreciate your suggestions, and this has already been proposed to the board by various investors also. So board will take appropriate decisions when it comes to taking the decisions.
Thank you.
Thank you. The next question is from the line of Zaki Nasir, individual investor. Please go ahead.
Hello, can you hear me?
Yeah, good morning.
Congrats on a fantastic set of numbers, Sandeep Bhai and the entire team at Monte Carlo. Sir, the cotton prices have been going a bit haywire, sir. And you mentioned that you've increased your selling price by approximately 18% for the next season. Sir, what do you think this raw material finish product parity will be maintained, sir? That is my question number one. Question two is, I mean, see, this year will be a very robust kind of a sale figure. It may be touching 900 crores plus minus kind of stuff. So would you confidently say that from next year onwards at least 15% growth on that would be possible? Thank you, Sandeep.
Yeah. Thank you, Zakir Bhai. The first thing you asked is the raw material. See, raw material price have increased, and we have taken that increase in our sale price, as you rightly mentioned, 18 to 19% in summer wear, which was accepted well by our consumers, and moreover, it has grown more than 20%. The trade show booking, even though the price was increased almost 19%, that shows the brand has the pricing power, and the customer can accept that price hike. That shows the strength of the brand. Now, going forward, the second question which you asked.
Sir, on growth for the next financial year, sir, in terms of.
The heartening thing as of now is that the stocks at the stores have gone down as compared to last financial year, and we believe that our closing stocks would be lesser than last year's stock level. So that will definitely help us in giving the good growth number next year also. But as every year we give our guidance in the fourth quarter once we have our financial year ended, after examining everything regarding the stock, regarding the inventory, regarding the our retailer status, so we'll be able to give the guidance only in the next financial quarter's conference call. But in any case, we are confident to achieve it, and we are confident to achieve going forward a good growth level, double digit growth. Which you have already.
Sandeep Bhai, and one more question, sir. See, your strategy, I would like to know your broad because Monte Carlo is becoming a more broad-based brand now. I would like to know the management strategy on south and west region of the country, sir.
See, I think in last quarter's financial call, I have mentioned that we are opening stores at Bombay, we are opening stores at Bangalore, Ooty, and other areas. So we have added, I think, almost 5-6 stores, and now we have a plan to add another 10 stores in southern and western region. So that shows, I think, the company's aggressive policy towards south and west, where we would be opening our own EBOs. And they are doing well also. Like the response which we have got from Bombay, it opened at Kurla, and then one more it's coming up in another mall. Then 2 or 3 are coming in Bangalore and Chennai also. So, but the response from the EBOs which we opened in southern and western actually giving us confidence to be more aggressive in those areas. So going forward, the major strategy for south and west would be opening our own EBOs.
Thank you, sir, and best wishes for the next year, sir. Thank you, sir.
Thank you. The next question is from the line of Dwarka Prasad, an individual investor. Please go ahead.
Hello.
Hello.
Can you hear me, please? Hello.
Yeah, we can hear you. We can hear you.
Sir, I am an individual investor. I have 2 questions. One is company since having 191 crores of cash, why don't you announce buyback at the earliest so that your share price can go up? Secondly, some footnote to come in your quarterly results. See, yesterday what happened, Friday, immediately after announcement of results, share price came down to 10% and it triggered the lowest hit of the share. So some footnotes should be there in your quarterly result. The result should be compared on year-to-year basis, not on quarter-to-quarter basis. So unnecessary shareholder doesn't suffer. Thank you, sir.
I think you have rightly mentioned that the share price has came down into C, but I can't comment on the share price movement. What I can comment on the company's performance. So company has performed best among the peers. All the listed companies, if you compare the results of 9 months, we have stood out as far as our performance are concerned. And if you compare my sale at pre-COVID sales of all the companies, then you would also like to come to know the growth which Monte Carlo has achieved over the other competitors. And when you come about the share price, we are the lowest value company right now, I think, in apparel listed space. The newer companies which have come up in their market cap and you see their PE ratios, I think investor will understand one day that they have to be present, particularly in Monte Carlo, seeing the growth potential, seeing the EPS and seeing the PE what we are playing at.
What I mean to say it happens that because of the confusion in the mind of shareholders, they have just compared quarter-to-quarter results, not year-to-year. That's why they have their holding and said price triggered low at the lowest level. My request to you to, sir, at least give some footnote in your quarterly result that it should be compared on year-to-year basis also. Hello?
Members of the management, are you able to hear us? Just allow me a minute, please.
I think it got disconnected. Hello?
Requesting the participants to please stay connected. We are just checking the connection for the management again. Requesting all the participants to please stay online. Requesting all the participants to please stay connected. We have the management reconnected. So we have the question from Mr. Dwarka Prasad. You may please go ahead.
I have already communicated, madam.
Yeah, so
I'm awaiting my reply, please.
As far as buyback and Dipsy company has been very generous in giving dividends because we would like to, return to our shareholders. So as far as buyback and dividend is concerned, the proposal has already been submitted to the board. So whenever we have next board meeting, I think the board will take the appropriate decision, noting all these points from the investors.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Karthik Jain from Sequent Investment. Please go ahead.
Thank you for the opportunity. My first question is, how is our sportswear brand Rocket performing currently? And my second question is, what kind of sustainable EBITDA margins are we targeting for the upcoming years?
As far as Rocket is concerned, we are doing it only online. So it will be doing a sale of around 3.5 to 4 CR in this financial year, which was, I think, approximately around 2 to 2.5 last year. So, and going forward, I think we have always mentioned in our previous conference call also that we will be maintaining our EBITDA margin of 18 to 19%, which have been historical margins pre-COVID level. The last year margins was exceptional because of cut down in advertising costs, cut down in the salaries, cut down in the traveling. So the EBITDA went up by 100 basis points, but the overall EBITDA which we have been doing in last many years is 18 to 19%. And going forward, we would like to maintain that EBITDA, or it may improve further also.
Thank you so much, sir. That's it from my side.
Thank you. The next question is from the line of Neha Sharma from Pearl Globe Investment. Please go ahead.
Hello. Thank you for the opportunity. So I have a question. So could you please tell us how have we proceeded on the PLI scheme that we had announced during the last quarter? Could you please update us on that? Hello? Hello?
Ma'am, please give me a minute. Yes, ma'am, you are audible. Let me check the connection for the management. Allow me a minute, please.
Okay, sure.
Requesting all the participants to please stay connected while we have the management reconnected. Requesting all the participants to please stay online. Thank you very much. Requesting all the participants to please stay connected while we have the management reconnected to the conference. Requesting all to please stay online. We have the management reconnected. Ma'am, you may go ahead with your question.
Yeah. Sir, could you please update us that how have you proceeded on the PLI scheme that you had announced during the last quarter?
See, we have uploaded our application to the government portal, and it is under, I think the last date is 15th February, and then the government will take the decision. So once it is approved, we'll start the process.
Okay. No issue. Thank you. That's it from my side.
Thank you. The next question is from the line of Abhishek from Share Giant. Please go ahead. Mr. Abhishek, you may please go ahead with your question, sir. Your line is unmuted. Mr. Abhishek R from Share Giant, you may please go ahead with your question.
Yes, please. So I'm asking, sorry. So just to give the first question from my side is, do we give some type of margins, like do we give the same type of margins to these online platforms as we give to our distributors? Or how do you see the trend in online sales going ahead? And how will it impact our in-store sales? Because as I see from the results in the presentation, like the online sales have grown pretty good pace. So that's why my question is coming from.
See, the online, we give the margins normally a little higher than the offline channels because it involves the transportation cost, and also there are some more sales and discounts which is happening in online sales. But overall, the margin profile, if I say like from all the channels, the difference is 100-150 basis point when it comes to the net level, which is net realized sales level. So the growth of online this financially, it is almost 85 to 90%, which has achieved 48 crore as compared to 25.92 crore last year, and the trend is very encouraging because people are preferring to buy online, particularly the younger generation, which prefers to buy online. So this is growing at almost, I would say that 70 to 75% per annum, and I think this trend will continue as more people are, accustoming to buy it online.
So, sir, my second question is like, can you give some kind of like color on the kind of EBITDA margins you generate from the online channel?
No, we don't make a separate balance sheet for online or EBOs for MBOs. It's a consolidated balance sheet only.
Okay.
But as I told you, that net realized price level is 100 basis point lesser than the offline channels.
Okay. And my last question is, as on 31st December, the company is sitting on 194 crores of cash and cash equivalent. So do we have any major capex plans going ahead?
The capex already we announced. I think if you have heard in the last conference call, we are going for a PLI scheme for Rux, which will be setting up in Madhya Pradesh. So the application is submitted to the government. So I think as and when it is approved, we'll start the process. And the capex involves a total investment of around 350 crore over 5 years, and which is 70-30 debt equity. So our investment would be in case that be 30% of 355, that is 100 CR in next 5 years.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Rahul Mehra from Infinity Capital. Please go ahead.
Yeah. Hello, sir. So I wanted to know what kind of cotton inventory levels we maintain and how do we factor in the increase in cotton prices? Like, is it a hit on our margins or do we take price hikes accordingly?
We don't keep any inventory of any cotton at any point of time. See, our business model is we go for a trade show. For summer booking, like we went for a trade show in the month of October first week, and then once the booking is made, we cover all our raw material and then we start the production. So we are insulated as far as hike in cotton prices in the mid-year is concerned, because whenever we have the trade show conducted, simultaneously within 15 days we cover all our raw material by taking every hike in the increase in the sales price. So as in October there was an increase of around 40% increase in the cotton prices. So that resulted in 18% increase in the sale price of the garment from our end. So we incorporated that increase and passed on to the consumer, which is well accepted, and we got even the booking increased by 20% as compared to last year. But as far as margins are concerned, we are insulated because every hike is being passed upon to the customer, fortunately, because of the pricing power of brand which it has in Monte Carlo.
Okay, sir, noted. So coming to our online sales, they are growing very sharply. So just wanted to ask.
Yeah, please go ahead.
Hello, was it not audible?
Hello? उसका कनेक्शन कट गया
अभी चल
हेलो उसका कट गया
Hello,
moderator, please comment.
Sure, sir. We just lost the line for the current participant. I would like to remind all participants, if you have a question, please press star, then 1 on your touchtone telephone. We have Mr. Abhishek R from Share Giant back. You may please go ahead, sir.
Hi, sir. Thank you for taking my call again. So my sir, next question is, what is our strategy on EVO expansion going forward?
I think we are opening 25 to 30 EBOs every year. So next year also we have the same target. It may go up also in the coming financial year, but that the complete guidance will be given in the next quarterly conference call.
Okay. So my next question is on, like, as you have a very strong brand, so like to further make investments in the brand and improve your visibility, are you planning to onboard any brand ambassador as well?
Yeah, I see. We have tried it earlier. I think most of the models which we have tried actually become the film stars later on. So as of now, we are using only the normal models, and I think that are serving the purpose because already awareness is there among the consumers.
Okay. So thank you, sir. That's all I want to ask.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1. The next question is from the line of Nitin Kapoor, an individual investor. Please go ahead.
Yeah, thanks for giving me the opportunity. Sir, I've been personally using this brand for the last 35 years, and it's quite an aspirational brand. But what I feel is that we have not exploited fully the potential of this brand. So how do you plan to grow this brand in the next few years? And any other products you plan to launch under this brand?
First of all, thank you for being loyal to the brand from last so many years. And you are right that we have not exploited this potential fully, and we are also aware of that. And I think we are trying our level best in last 2 years how to increase our strength, how to increase our sales in areas where we are not present, and how to increase our areas where we are present to further increase the sales of the category, which are little weak as far as total portfolio is concerned. And definitely we are aware of it, and that is resulting in the increase in revenues also. And if you see in this financial year also, the strategy is paying off. We have been growing at such a handsome rate, and I think that we are on the right track to explore the potential going forward also.
This has been
yes, sir. Continue, please.
Yeah, just let me just tell you, because if you see the history of Monte Carlo, you would realize that with the passage of time, we had been expanding our activities to a different level. It started in 1984. In 2002, we entered into cotton side because, once our brand was accepted by the market. Then in 2006, we came out with the other cotton products. Then in 2011, we introduced the other cotton products. Now we are every time, whenever we find an opportunity, we introduce a new product. And fortunately, the product which we introduce in the market is widely accepted also. And that is the reason, we have been able to achieve the growth.
Yeah, right, sir.
This is a history of the company. We started only as a woolen, but now our presence in the market is throughout the year. It is a pan-India brand now.
Sir, I completely agree with you, and just wanted to ask, any other products you are planning to launch under this brand, any innerwear or anything like that?
No, I think we are not putting any focus on the innerwear segment right now. It's already very, very competitive segment where I think large companies are present in that. But we are focusing on the home furnishing segment, which you have seen that the company is adding newer categories, like we have added towel this financial year, bedsheet we added last financial year, and also now we're going for adding the rugs case of, which is totally export product. So these are the categories which are being added in last few years.
Okay. Secondly, sir, you just said that you have booked 20 cotton wear. You have to the trade shows. You have booked 20% more. 20% more is of volume or what?
Volumes.
Volume. So at a price of more than 18%, you have booked 20% more volume.
Yes.
Okay. Sir, thanks a lot for that, sir. And one more. Sir, is it a fair statement that due to extreme winter this year, the inventory in the woolen market would be quite low, which should be beneficial for us for the next financial year?
Yes.
Okay. Right, sir. Thanks a lot.
Thank you.
Thank you. Reminder to the participants, if you have a question, please press star then 1. The next question is from the line of Naveen Jain, an individual investor. Please go ahead.
Hello.
Mr. Jain, go ahead.
Yeah. Sir, I want to ask one question. Is like any plans to go into innerwear category?
I've already told that we don't have any plans to go for innerwear category as of now.
Okay, sir. Thank you, sir.
Yeah.
Thank you. A reminder, participants, if you have a question, please press star then 1. The next question is from the line of P.S. Chaudhary from CFS Financial. Please go ahead.
Very good morning.
Looks like we've lost the line for the current participant. I would like to remind all participants again, if you have a question, please press star, then 1 on your touchtone telephone. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments. Over to you all.
Thank you very much for, I think, all the questions you have asked. And we are fully confident that going forward, the company have a lot of potential to grow in coming years, as well as we are right now on the right strategy to have our growth channels be exploited. And if you have any query relating to anything, you can always have a email to our Dickinson World, our investor relation agency, and also at the corporate montecarlocorporate.com website. Thank you very much.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you all for joining. You may now disconnect your lines.
Okay. Thank you.